Scott Bessent says we're going to have 3.7 trillion in stablecoins in 5 years. What are your thoughts on that opinion?
Yeah, the Treasury was probably the most bullish on it. I think they see it as a lever they can pull to bid up short-term treasuries and help finance the deficits. Bessent has indicated as such many times over the past few months. So there's been some arguments about whether stablecoins on net actually increase net treasury demand from I'm seeing more and more macro commentators kind of post about stables, and I'm not always sure who to believe, because there's some TradFi folks that are now kind of looking into this stuff, and there are pieces of their analysis that I think they're missing.
What's up, everyone? Welcome back to Shoot the Shit Pod number 10. I'm your host, Matthew Nay, and I'm joined by the Enterprise team. We have Dylan, Chris, Kenji, Sam, and Andrew here today. Today is July 28th. We have a loaded agenda. We're going to talk about some macro. Where are we in the cycle? Digital asset treasury news, the fallout of the Pump launch, Zora taken this weekend by storm. We released the State of Stablecoin report, and always we'll wrap with some DePIN corner and what we're doing on chain. So let's look at where we are. We're getting the S&P hit 6,400 for the first time over. It's fallen off a little bit, 6,380 right now as we speak, up 3% on the month. And then going over to crypto, Bitcoin just crossed shy of 118 and a little flat on the week. Same for ETH at 3,700. Sol down 6%, which is in the last hour. Hype making a little bit of a comeback after a little underperformance as the rest of on-chain moved on. So I'll kick it over to you guys. What are we doing? Everyone was over the weekend talking this was going to be a great week. We're getting some Michael Saylor buy pressure. I know Angie had a lot of notes in the docs. I'll kick it over to you. Where are we, and what's going on? Why is Sol dumping?
Why is Sol dumping in particular? Maybe we can talk about equities first. It is a big data week. I think there's a lot of macro prints being released. There's FOMC on Wednesday. I don't think we're not expecting a cut, but there's, I think, 2 cuts priced in for the rest of the year. So we'll get some commentary from Powell and see how that moves things. But markets, TradFi has been in a weird spot, because on the one hand, the S&P has just been slowly grinding up on pretty low volatility. But then there's these pockets of speculative activity, some revival of some meme stocks Kohl's, Open Door, some things that moved in 2021 popped off for a bit. They seem to be pretty short-lived thus far. It's not really the same type of mania as 2021, and I don't know if retail participation there is as high as it was, but it's a weird dynamic because people are seemingly still kind of cautious, but then there's still these pockets of fervent speculation. And then meanwhile, we're still getting pretty positive headlines, mostly from Trump, I would say. There's had a trade deal with Japan, even though the details are usually not set in stone, and what sounds like a really big investment on their part sounds more like planned investments, depending on what private companies over there want to invest in the US. But I think the takeaway on the trade side is a lot of these things being done are just for show, and I don't think the market's taking it very seriously anymore. And then I guess more fundamentally, some fears around the labor market have been kind of allayed, because certain time series the jobless claims they accelerated in the spring, post the tariff headlines, and then now they seem to have calmed down a bit. And so labor market is in this kind of odd, it's not super strong, but it's also not decelerating significantly that would warrant a cut anytime soon. I'm sure there's different takes on that, but yeah, it's kind of a weird spot where I feel a lot of people are calling for a kind of wider pullback or correction, just given that they're seeing these pockets of speculation. But thus far, we haven't really had anything. You mentioned the Treasury companies. Maybe we could get into that later. But yeah, mostly positive headlines. There's more kind of general institutional headlines that seem pretty positive. Interactive Brokers was thinking about expanding its crypto and stablecoin integration so that users can fund their accounts 24/7. PayPal is letting merchants accept crypto for payments, but apparently, I think if you dig into the press release, they don't actually give merchants whatever you're paying with. They swap it into PYUSD, and then they give the merchant cash on the receiving end. But still some like positive news, I think, and we've continued to see like more and more interest around stablecoins as we've talked about at length. But yeah, outside of that, probably could talk about the Treasury companies a little bit. I don't know if I should keep ranting or if anyone wants to chime in. Okay, I guess I'll keep ranting.
Yeah, I guess one thing I had a question about though before we get to the treasuries, because I think we'll spend a lot of time there. But I'm looking at Poly Market right now, and there's a 52% chance of a 25 basis point decrease in the September meeting. And but I feel like when we were on episode 2, 3, I don't know, like 4 or 5 months ago, that was maybe similar chances for the July. Is that just what when you say like that's priced in? Is that going to get pushed back? Like what do they have to see? And does Trump have to keep bullying Powell in order for that cut to actually happen? Or like what do you think? What's your best guess?
I think Powell's main points in the past few meetings is that the threatened tariffs are like a direct risk to higher inflation. And until that's like removed, the labor market isn't weak enough in his eyes, even though some might argue otherwise, to justify cuts right now. And like I think in his mind, the upside risk to inflation from here, if these tariffs kind of stay on, and then on the fiscal side, we're going to be like pumping a ton of money into the economy. Those two things kind of, I imagine Powell's kind of scared of, reigniting inflation and having another 2022 where the market kind of tanks off of that. So yeah, I think further deterioration in the labor market is probably needed first. And against most people's like thoughts about how bad the economy is, labor market's still kind of hanging in there, even though it's much tougher to get a job, and it's tougher to like there's definitely less mobility versus like even 2 years ago, I would say.
Nice, that's helpful. Yeah, let's deep dive into some of these treasury companies. And so let's start with ETH. And so Bitmine and SBET, they're now the two largest holders of Ethereum. Bitmine at 566k ETH, SBET at 361k ETH. Andrew, I think you were saying that they're gonna have a little bit more cash either later today or tomorrow to maybe go buy and bid some more ETH. And so we could, sorry, we can stay general in ETH, or we can kind of. I just saw a big announcement that someone's launching a $500 million pipe instrument to bid BNB. So like, how far down the risk curve are we going to really get with all these funds launching up? Are we going to see majority of them sticking around in Bitcoin ETH land, or maybe even a little bit of Solana? But like, what are your guys' thoughts there with institution clearly having a lot of appetite to go and bid these assets, and each one seems to get filled instantly almost?
Yeah, I think for now the ETH ones seem more reputable. I think SBET's going to. They had a shareholder vote last Thursday, which allowed them to issue more shares, which they might have done already, and who knows, they might be pushing another 9 figures into ETH at some point this week based on that. But yeah, these other altcoin treasuries, I think people should be a little more skeptical of. Just whenever there's like the foundations involved, and it seems like they're disposing of or like kind of getting rid of locked tokens or investor tokens from previous sales, I'm like a little skeptical on the net impact it's going to have on the underlying. I think Sui had one where it like was partially filled by the foundation, and then yeah, I'm not sure how the Tron and BNB ones are, if there's like actual demand for them yet, but we'll see. A lot of them have run up into the announcements and then sold off afterwards, which is interesting. I don't know if some people know about these things ahead of time. Ina did something similar, but actually seemed to like continue the move afterwards. So we were talking with Kinji earlier about, I think they raised like 360 mil, but like 100 mil of those were from locked tokens. I don't know if it's from the foundation or from seed investors or something, but yeah. So
I don't think they went into specifics on where the locked tokens
right.
came from, but yeah, part of it was basically swapping locked foundation tokens for liquid ones.
Yeah, and then sorry, go ahead.
That was a different strategy though, which I actually think is really interesting. They're like pretty much putting a backed token equivalent on the stock market. So almost like a reverse situation where they're like still requiring like investors to buy it, but it's just creating like easier access to the ENA token. But like if 350 million buy pressure gets, or 250, whatever it is after like the foundation's donation gets locked, it gets bought up instantly. I mean, that's going to create a pretty big move in the token price.
Yeah, the only thing I would say, like the ENA one seems fine, I suppose, but some of these other ones, like they'll file like a shelf offering, or they like propose an amount to be raised to be issued, but the headline can be a little deceiving about how much actual cash they have to deploy down the line. We'll see where those end up. I mean, it gives a little toppy vibes as well once people start going way out on the risk curve with these vehicles. It actually reminds me kind of the SPAC craze a bit in 2021, which, as we know, went on for a while, but was also near the top.
Sorry, Andrew, I'm going to turn this into a slight Andrew Q&A so I can get information. But like, I've started looking a little more closely at the Treasury vehicles, and they kind of feel very similar to just like the Grayscale investment trust, but instead of like outside capital running the ARBs, it's like an actual company running the same ARB. I don't know. Does that framing feel right? And does it, I don't want to say blow up, but like start to unwind in the same way where you start to get some things trading at a discount and then you have some people who want to sell to buy back shares?
I think that makes sense. I forget how the GBTC trade, like I forget how people properly hedge that, because there was also the difference with the trust was that like investors couldn't easily exit, right? For like until
Yeah.
This, like with SBET, that's trading still at a premium to NAV somehow. Like I don't think it's as dangerous as a situation as GBTs. Like I don't think there's as much leverage necessarily being built up like that. But yeah, I think the scenario we all like have to worry about is, okay, like some of these bigger ones are trading at a premium for now. What if the less reputable ones, like equity market investors, like, all right, like what is this? I don't want to own this at all, and it starts trading at a discount. And then there's some scenario where they sell the underlying to buy back their stock or something. Like I don't know the mechanics of like why or how that would be needed if they start trading at a discount to NAV, but you could kind of see it happening down the line. Like all these people are rushing in to buy because there's this like weird arb where stock investors are willing to pay up for these assets, and then later down the line, as prices go down, the opposite loop kind of just happens.
I think sorry, go ahead, Matt.
I was gonna say to play devil's advocate, and I'm not sure where I fall on this line of thinking, but people say like when people bring up like, oh, some of these might fail, the first like argument to say like, oh, that's okay, is when some of these larger players like a strategy with Bitcoin or these SBET and Bitmine will just go and buy those failed treasury companies for cheap Bitcoin. And so is that a viable strategy? Does that make sense in the line of thinking when you guys hear that argument to kind of defend the downside for some of these strategy plays or treasury plays?
It's possible. It's just like at that point, I don't think I would want to be involved and be like heavily risk on at that point. It's like clearly something changed where they can no longer afford to implement that strategy and things are going wrong. It's probably not the time to be exposed to all of these assets. But yeah,
I was going to go down a similar line of thinking where like the premiums shouldn't be perfectly in line, but if we're at a situation where there's a ton trading at a discount, that probably means the strategy one's gone down a lot and they probably wouldn't be looking to add a ton more. I think Upbexy, it's one of the Solana ones, they're trading at a slight discount right now. I think it's like 90% NAV. Could be an interesting case study. Don't know how it'll play out though.
Do we have any idea if like the amount that's being invested in by these holding companies is actually making a dent on either ETH or downstream of like Sol and other of these alts assets value? I guess another Q&A question for Andrew.
I do think the narrative in itself inspired a bunch of ETH ETF inflows that were mostly delta neutral before, and now I think people went directionally long just based on this like little feedback loop we got going for a few weeks. And combined with like people being largely underweight ETH, like it was like all right, it was a pretty good setup, and I think people kind of changed their behavior with regards to the ETFs. But how much incremental flow you get into these like other tokens, not so sure. Like I don't think the Sol treasuries are that large yet. I haven't really tracked those as closely, but it seems like they're a fraction of the size. And the Sol staking ETF is like still pretty small, like 125 mil last time I checked. So yeah.
So all these TradFi investors, I'm going to assume they don't really have great valuation frameworks for any of these assets. So are they just thinking buy? Like, is there a point where they're like, this is overvalued? Like ignoring the premium discount, but just like the underlying asset? Or can they just like keep buying forever because they're like, this is crypto?
I think a lot of people, investors, funds probably played MSTR at some point short and like didn't have a great time with it because it went on way longer than they thought and like traded at a premium for way longer than they thought, to the point where arbing some of these things might not be worth the risk. That would be my impression, like because MSTR is like, I think they raised another 2.5 bill for like a new, I forgot what the new one is called, STRC, which is like pays like a fixed yield. Don't quote me on that, but like this is still ongoing. Like he's still managing to like kind of continue to do financial engineering to raise more funds. And like I haven't looked at MSTR for a while, but like I think a lot of TradFi investors would have assumed this entire but like strategy would have blown up by now, and that might make them want to stay away from the rest of these new ones.
By the way, I just read that there's now a SWE one that's endorsed by the foundation.
Yeah, going off that, like how important does the figurehead matter? Obviously, Bitcoin had Sailor, Bitcoin Jesus, and it was a very bold person for that. And then obviously we're seeing with Joe Lubin now paired up with BlackRock's former head of digital asset. That's a very easy pair to get behind. Tom Lee with Bitmine. And so like you don't really see that in Solana. I know like the Athena one did well because it has the foundation support. Maybe the SWE one will do well because it has the foundation support. Does the like figurehead matter when it comes to these? And like it seems like it might, because of what Tom Lee is able to do and hop on CNBC or whatever the news networks and go and really provide a clear bull case. Is that do you think that's going to be a reason why some of these fail and why some of these succeed?
Do you want to break, Andrew?
Yeah, go for it. I can add on.
Like you need someone to market the products. And if you have a very good figurehead that can help communicate just a general narrative, then yeah, sure, that'll drum up interest. I don't think it's necessarily why an individual one, I don't think it's a reason why one would fail, if that makes sense, given a lack of marketing. I think if you have one head kind of pushing that entire asset class, all of them should roughly move in line with that. But like the winners specific to the treasury companies, how long it can last, I think is how much the people leading these can drum up interest from a buyer base. And, I don't know if you get just like a random person from a random foundation who can kind of speak the language of TradFi and use the terminology that buyer base would want to hear in order to allocate capital. But when you start to get like the Tom Lees, the Michael Saylors who understand that story a bit better or understand that language, then it can certainly benefit. But I still think it's just, does TradFi want to buy it? Are they willing to move out the risk curve? And then the marketing's kind of on the edges.
Yeah, I agree. It's first question is, does TradFi want to buy this asset? Then the second question is, which of these hundreds of different whatever companies do I use in order to acquire the asset? It seems like it's kind of an undifferentiated commodity to some extent. Like I'm sure management team is a factor as well as other corporate elements, but I think it actually becomes more of a attention economy battle where whoever can rally the most amount of support for their holding company stands to gain a greater relative share of the TradFi money coming into the underlying asset. So I think we can actually apply crypto lens. This is going to be an attention economy game versus more of a TradFi game because they've already decided on the asset. Now it's just what meme holding entity do I want to hold it through? And what appeals to a TradFi investor might not be the same as a retail crypto investor. but it's the same rationale in terms of what public figure, what underlying elements makes this more attractive, given that's a commodity.
I mean, it's the way that some of this goes down to that all these companies that are doing this now are kind of like the first ones to take the leap, and maybe like a little bit less reputable or like, like not like necessarily a mainstay name for all of these. And then more reputable names come over time. These companies get flushed, and because everyone just goes to the other more reputable companies because it is a commodity.
I also think like they're competing on a perception of trust and credibility. Like a lot of it's signaling like, look at me, I have 40 years experience in this plus some crypto industry. I'm better than this other person who runs this other company. So I think a lot of it's going to be like more based on tenure, like perceived gravitas, credibility, but I don't think it actually adds anything to the underlying company's value.
Yeah, it seems like SBET is going for that route since they hired that the ex BlackRock guy. But yeah, I agree. I think when the ETFs launched, I don't think the issuers actually knew how to market it properly, and you needed some figurehead to kind of explain in like kind of gimmicky and like easy one-liner terms for why they should own something. And like Tom Lee said something like, what the Genius Act is the ChatGPT moment for stablecoins. And I was like, what does that mean? But like it just works, right? Like it probably got a bunch of people that were like, whoa, shit, like we got to pay attention. So, and then ironically, Tom, like at least when I was trading on the floor, like Tom was kind of like made fun of because he was just like constantly permabull no matter what was going on in the market. But ironically, he's like survived the longest because things have been bullish despite all the bad news, and he's kind of been more right than wrong, I would say, over time. And so he's kind of a good person to like lead the narrative, in my opinion. But outside of ETH, I think actually the more likely scenario with these other altcoins is not like any individual treasury company being particularly successful, but this eventually leading to large cap index ETFs for the biggest top 10 to 20 cryptos. And I think that as a product is actually more attractive than you having to compete on narrative with BTC and ETH. Come up with this like third explanation. It's like the Solana people are like, it's decentralized NASDAQ. And then the Sui people are like, it's decentralized NASDAQ, but we also do gaming and blah, blah, blah. Like it's going to go over everyone's head. So like at that point, if everything has been a little more legitimized, then I think more people would want to own like an index ETF and not have to think about it at all and just get broad-based exposure, even if that means they have some like not so great assets in there, like from a crypto native perspective.
I guess as we wrap up this like digital asset treasury section, do you guys think there's going to be more or less by the end of the year? Will one blow up by the end of the year? And what do we think about Tom Lee's prediction of 10K ETH by the end of the year?
All right, I'll go first. I'll put my head on the chopping block. Let's see. There'll be tons more. As long as there's a bid, people will keep launching them. And there, like, frankly, isn't huge downside to just launch one and find out if there is a bid. Well, this other one, will one blow up? I don't think so. I think we're going to have a pretty strong risk appetite going into the last 6 months of this year. So you want to extend that out to like 2 years, I'm sure one will, but 6 months, no. If one does blow up, it'll be like a tiny long tail one that just didn't work. So I'm not worried about the majors. This feels a little too, I feel like I'm giving too bold opinions now. And then the last one, 10K ETH. When's that supposed to be by? End of year?
End of year, I think you said.
I directionally correct, inaccurate prediction though.
What do you think if you had to put a price on it?
I don't know. End of year, if I think everything's going to be bullish, why are you dragging me into this?
Did you say all-time highs then? Like blow past all-time highs?
Yeah, maybe. Okay. I don't want to answer that question. I'm going to sit that out.
Pass.
All right, Chris, you're next. You have to give your opinions now.
Well, my very uninformed opinion is that I agree. I don't think any of these will blow up. I feel like this type of thing can go on for just so much longer than people think it can. Like the appetite can just grow and grow and grow. I think definitely more for sure. Probably some bigger players step in. And ETH 10K, I'm going to take the under on that for sure.
Sam, you specifically though on the Athena one. What are your thoughts there? Is this going to be bullish or bearish for Athena in the next 6 months?
Definitely bullish. I think that the bet that you're making like two bets, like a nested bet. The first is that, like Dylan said, TradFi is going to want to buy our altcoins, which, I mean, like precedent says that, like, as we get bullish, they're going to move further on the risk curve and they're going to express that through altcoins over just taking like leverage on Bitcoin or ETH or Sol or something. That might change because this cycle, it's a little easier to, I don't even know if it's a little easier to access leverage. I guess you had FTX and you could like go 100x leverage, whatever you want, but it seems like with perps, like leverage looks a little different this cycle. But so the bet is that TradFi will want to express going risk on with our altcoins. And then I guess the second bet that you're making is that TradFi will choose stables over DeFi, or they'll choose stables and on-chain stables and DeFi. So I think that both of those are very decent bets to make. I think Athena looks like one of the best ways to express like the on-chain stable adjacent token thesis. Whether they call it, they don't like, I know that they don't call it a stable, but by all means, like it's pretty much pegged to the dollar. So I think that it's a pretty good investment here.
If no one else wants to provide some prediction, we can move on to like, let's look at the only Kenji had to put his head on the chopping block this week. We'll get the other guys next week, but we could go into a little bit spicier too. We'll have to get Dylan and Andrew's take on Pump, where we're going from here. So we're about, I don't know, 2 weeks. Yeah, 2 weeks, about 2 weeks after, maybe three. Yeah, 3 weeks after almost 3 weeks after the Pump launch. It is now trading at 896, just shy of $900 million market cap, about $2.5 billion FDV, and the chart does not look pretty whatsoever. And I know it's been the talk of the town, the graduation rate, the daily tokens deployed does not look good. Bonk, on the other hand, does look good. Jupe Studio had a runner this weekend, getting almost a little, I think it almost touched 70 million. I don't know if we're allowed to say it, as the token was maybe not safe for work. It was Uranus. It was a funny token. It made me chuckle. But it's getting competitive, and there is still nothing. The only thing we've heard is Elon, he hopped on a podcast and said the airdrop is going to be delayed or not anytime soon. And so that's the only thing we've heard from the team. And so what do we think 2.5, 3 weeks after launch? Is this going to continue? Is it down only? And what are we going to see with like the launchpad space on Solana, and then also in general when we go into the Zora move too, as that is very clearly a launchpad as well, but a little bit different and nuanced in that way. But I'm curious your guys' thoughts.
I think I ended the last pod by saying I was long pump and long hype. So that was a bad trade. That was like my worst trade this year, but I would have taken it again. I think the incentives were lined up for them to be tactical and like how they either increase buyback, tease some new incentives, just like more details about the airdrop. Having those things lined up pre-TGE is a reasonable assumption that they would have like, planned a little bit. And even the way they like executed the buyback was like what they bought like 20 mil worth, and then it was kind of scattered afterwards. That was very disappointing. I mean, I thought it made a lot more sense and the incentives were aligned for them to want it to succeed and do well. And I don't think it would have taken much effort for them to do pretty well. And I also thought like when it faded on the buyback, that was obviously like a pretty negative signal. But then afterwards, I thought they were like waiting tactically for some funds to exit they had like a 30+% return in just like a few days or so. So, and then tactically release some information to have the token do well. But they didn't do any of that, and they seem like don't really have an intention of figuring any of that out. Rather, there's no urgency around how fast they're figuring that out. So I don't see any reason to be bullish at all. I got out like, I think 4.2 or something, and obviously losing the ICO price was not great. And then meanwhile, I think Bonk's market shares remained at like 60 to 70%. There's not much moat. And if this volume and, these launches like go to a less extractive and, kind of more a team that contributes more back to Sol and back to their own token, I think that's a net positive. So I would have made the trade again, but it's disappointing how it played out, I think.
I feel like it's worth mentioning exactly that, like yesterday, 11 tokens graduated on Pump.Fun and 137 tokens graduated on Let's Bonk. So like the spread has gotten pretty large at this point. So I don't see any reason why the token doesn't keep going down from here.
Yeah, I mean, they got to do something. It's like, I mean, I feel like everything you're saying, Andrew, like this was structurally set up for them to just like have a home run, absolutely hit it out of the park. Could have gone there, did massive airdrop right away, announced really bullish buybacks, maybe like pumped a few tokens. But it seems like it's just the key man risk here. Like if he's not going to do anything, he's not going to do anything. But I think it's not necessarily like binary, but if he does step in, I think they can still recover this, honestly. I mean, like, I think all of us would say like the moat is non-existent for these things, right? And they have like a massive war chest that they can deploy. I mean, obviously I'm relatively short-term bearish, but I actually do think that if they execute, which is like a massive if, I think that what they're doing makes sense as a growth trajectory for the company. It's just a big if whether they're going to give a shit and actually execute on this or just kind of like, I don't know, give up, I guess.
Yeah. There's an old Latin phrase, finis origine pendit, which means the end depends on the beginning. And in this case, the beginning was really bad. That being said, I think expectations have lowered. I think expectations are going to continue to lower. So much so that if they do anything that would be considered moderately favorable for a token, a month, 2 months down the line, I could see it rebuilding momentum. Because I think at this point, it's really about controlling the momentum and narrative. And it's going from, all right, we hit rock bottom. We're going to go back to the top because we're Pump.Fun. And I think they just need to bring back that fun energy, right? Like, I think it's going to really be going back to the roots, controlling the narrative, doing some big things that they've held in the cards. And I think if you can build enough momentum, everyone here who's like bearish and like they can't execute, they don't know what they're doing, I think you see a 2x or 3x and that gets thrown out the window. So I wouldn't write off Pump.Fun today. I would be wary though, and I think people's risk tolerance has definitely shifted. We'll see. Let's hope they do something fun.
Yeah, they got to do something. They just got to do something crazy. Bring this thing back.
Okay, I have like two thoughts on Pump and kind of Zora. One's like a product thought and one's more like a market thought. But from the product perspective, I think competition is net negative for the Launchpad kind of vertical as a whole. Like the best marketing you have for someone to use your Launchpad is seeing one of your dumbest friend get stupid rich. And that happens when you have attention and capital all on a single platform. And once you start to fragment that, then it gets harder to actually it gets harder to push one of those tokens up to a level that becomes attractive and it feels like a worthwhile lottery ticket. So when Pump was kind of all the craze, it was also the only Launchpad that had ever gained meaningful share. And that made it like the meme coin proxy. Like if you wanted meme coin exposure, you basically had to buy Pump. There were a couple other ones you could think about, but everyone knew Pump was the main thing to buy. And so now you have, if Bonk's coming in, if Jupiter's coming in, all of a sudden that hurts the product because I feel like there's less overall upside for any individual token. And then it also hurts the investable story in terms of now you actually have to select which one you think is the winner or which one you like the best, as opposed to just having one that captured an entire vertical. So like I said it, I think I said last podcast, I was like, whatever Pump tops at, like to me, that's the top of Launchpad mindshare. And I still think that like it'll have moments, like there will be still meme coin runners. There still will be times where we look at Pump and go, is this a buy given meme coins have been back for the last 2 weeks? But like overall, I don't think it comes back in the same way. So that's kind of my thoughts on the product. In terms of market stuff, I think how do I say this? With the token sale, I think Pump.Fun turned from something that was very like crypto native driven to something that was then a liquid fund game. And like they play an entirely different game than us degens in the trenches. So like a 30% gain in 2 weeks or a week basically for a fund that has hundreds of millions that's been underperforming Bitcoin, like you have to take that trade. And I think I overestimated like the proportion of retail funds versus professional funds. And I think you can almost extrapolate from that. Like there are three separate games going on in crypto right now. You have like the TradFi game trying to sell your majors to TradFi. You have this like middle ground liquid fund game of trying to sell your funds or tokens to liquid funds. And then you have all the rest of the trenches, which is probably where Zora lives right now. And it's about thinking, can you get that token to that next set of buyers who are very, very distinctly different in my mind. So I think we saw a token try to graduate into a new buyer set and ultimately kind of fail. That's my thoughts.
Would you consider Zora part of this launchpad meta? Like when you talk about like mindshare topping out?
You could look at the mechanics and say, yeah, they're similar, but I think they're marketing it as an entirely different thing. They're marketing it as social, as content. It feels closer to friend tech than it does to Pump, which you could argue are somewhat related, but I wouldn't classify them as the same vertical. It's more like Zora is Pump.Fun for content as opposed to it is a Pump.Fun competitor, if that makes sense.
Yeah, but I guess it's that same like what you're saying, how it just ultimately when more platforms come up, it just dilutes the others. Like I feel like Zora is doing that right now to all the rest of them because we're having like I don't know if there's been any crazy runners on Zora yet, but I assume people are at least like chasing that right now. Right.
Yeah. For context, we talked about Zora maybe 2-3 months ago when they swapped their protocol, and whenever it's basically similar like an Instagram feeling within the base app or the Zora app, you can go and when you onboard, you create a creator token, and that's like your profile page, and that token is just stuck to your profile. And then also whenever time you post anything like a picture or anything that has a token associated with it, so you can go and buy that post and capture whatever that mind share of that token. And over the last month, our fearless leader, Average Joe's Crypto, caught it perfectly and called it, and it's up 820% in the last month and almost clipped a full $1 billion FTV, now sitting around 780 billion-ish. And for a while, and why I think a lot of this context is relevant with the Pump discussion, is people were still losing money, longing Pump and paying funding. And the whole time it was running up, the funding was negative. You got paid to long Zora the entire time. Now it's flipped and it's come off a little bit, cooled off over the weekend. And so, but that's just some context with, and looking at the actual like metrics about like coins created, wallets, is like they've ticked up a little bit, but there's not a ton of great, hey, Zora's here to stay type of metrics. Yeah, you have a lot of creator coins, some people popping up, but the returning creators is so. I mean, it's better metrics than Pump though, to give some context there. And so, yeah, what do we see? Is this the return of SocialFi? Is this the return? Is this FinTech 2.0, or is this a little different that it's actually might stick around this time and not collapse in our faces?
Dude, this is the thing, is like, this is 100% one of those price leading the narrative moments. Like we all hated content coins like 2 months ago, right? Like everyone hated them.
I think we hated them on this podcast
because it's a bad idea. Like it's not a good idea, to be honest with you. Like I think like now that Zora is pumping and everything and the integration into the base app, like I get it, the distribution, like the flywheel's going right now, but like at its core, like people don't want this. Like I really think people don't want this as a product. So yeah, we'll maybe have its moment, whatever. I'm sure it can go way higher. Caveat, I'm sidelined to all of this, so maybe there's a little salt in here too. But I just, from the amount of SocialFi experiments that we've seen and like the creators that anecdotally I've talked to and just like the people on Twitter, they don't want everything to be coined, right? Like you saw Jack Butcher, like the other day he posted, Jack Butcher's like a really famous NFT artist for context. He logged into the Zora app and just immediately his visualized value coin got launched. And he was saying like, I wish this didn't happen. Like I would have been way more intentional about this if I had done it myself, which he probably wouldn't have done it himself because creators don't want a coin. Like all of a sudden it puts so much pressure on you. Everyone in your comments being like, come on, pump my coin. What about the price? Like people don't want to think about that, right? Like I don't think fungible tokens are the medium that creators like will be liberated under. Like I think NFTs are great. I love NFTs all day. I thought Zora was way more enjoyable even when they did the open edition NFTs. And I think they've been trying to find product market fit for years and years, and a ton of respect for the team. They've been iterating like crazy. The app is getting super updated. They launched their own L2, whatever. But I just think, I don't know if anyone else has different opinions. Like, I just don't think the social token, fungible token for creators, like, I just don't think that's an idea that like anybody wants and that there's real demand.
I think Chris makes some great points. I can tell he's been reading my tweets lately. Creators,
coin something.
Creators, like their reputation means a lot. Like like creators have a more difficult time of finding income on average. Like your reputation is everything. And if you're launching a token and like your actual fans buy it and it goes down, like they're going to remember that. Like it's going to harm your brand. It's going to harm your long-term earning potential. And I don't think creators are speculators. Like this is tailored towards speculators who don't necessarily care about the creator. They just might buy the token because they know the creator is on the up or has a lot of potential, but they don't really care at the end of the day. They're likely not like real engaged fans. So you're not bringing in a real substantive community base. You're bringing in speculators for a creator who's probably not a speculator. And if they are a speculator, like they're probably on crypto Twitter and it's a very small pool. I don't think you can build a long-lasting platform off of that. I won't show my celebrity or creator stablecoin thesis here. I'll just say I think the one thing Zora gets right is UX is really good. It's very low friction. The one thing I hated about friend tech was it was like really weird the way you had to like install it at first, and it's just like all these like weird add-ons, and I think the infrastructure just wasn't in place at the time where you had a smooth UX. And I think with these platforms, you need to reach escape velocity very fast, and that like you want to create like an NFT effect where like everyone's like, oh, this is the next big thing. This is gonna keep going up and up and up, and people start building narratives and trying to convince themselves that these have value. I think this has the potential to have that flywheel go into effect faster because it's really easy to download. Feels like Instagram. It's low friction. I think in the long run, there's no way these tokens survive. And I think that will be the death of Zora, as it is for every SocialFi platform, because the only real way to survive is getting so much attention that advertisers are going to pay. And you can give like a share of revenue based on how many impressions and engagement you generate. And I think that level of adoption is just never going to happen. So this could have a run. I don't know how big it could get. It could get very big, but it'll inevitably decline to zero, in my opinion. And at that point, people will start adopting creator stablecoins, which I will not shill on this podcast.
Do you not want to show that because you're waiting to drop it, or do you just not want to show it? Because it's a really interesting.
Next pod.
I mean, if you want me to.
Okay.
Like, write it down. Next one, you can give a manifesto.
Okay.
Yeah, I mean, I'm not bullish like Zora, the product. I'm not. I want social to work, but it just hasn't, and I don't think Zora is the thing that unlocks it. What I am questioning though is like, what does this mean for? I don't want to call it the trenches, but what does it mean for like lower cap DeFi coins or lower cap tokens with some product in general? Because Zora basically took like an old narrative, a narrative that people like but has never worked, and then slapped just like a DeFi summer tokenomics on it, and CT said, okay, let's send it. So is the like, I thought the low cap game had evolved into something more sophisticated. And this makes me question all of that. Like if Pair or, I don't know, like an Euler just threw on some tokenomics flywheel, do you just blind bid that now? Because the market has shown, hey, we're willing to bid these old school Ponzi's. Because if you think about it, like that's what sent this. You can argue Aerodrome had success on the back of something like that. And is that still a repeatable model if your token's trading in like the 50 to 250 FTV range?
I don't know if that's
Go ahead, Andrew.
I'll go quickly. I don't know if that's the read-through as much as what Dylan said. Like, well, I don't know if he was saying it in this context, but I think there's some path dependency here where it's like, because Zora did well while people had all of their funds locked in Pump, it did well because everyone was sidelined. So like there's a timing thing there where I don't know if it's really the mechanics that's making the difference there, or if it's just people's positioning and like refusal to buy something because they thought this other thing would work, but it didn't.
I think that with...
I was just going to say, so less
one at a time.
My bad. Just quickly. So like less of a tokenomics catalyst and more of almost people taking safe haven in a small cap to a certain extent.
Yeah, or it's just like it got enough momentum to become the one thing that people focused on, but refused to buy because they were already positioned elsewhere.
Got it.
Yeah, and I think, Average Joe's Crypto said this on Twitter. Like, it was a Goldilocks situation. So much stuff lined up for Zora in that moment. I will say, if you have the opportunity and the timing is right, I think you should slap that flywheel on. I think it works. It worked for virtuals. It worked for Zora.
Yeah, and I think it could work. It's just the question is how long will it work?
The thing about Zora, though, that I think is different from like every other launch pad is that, and like John Charb and Jesse were going like in on each other today on this, was like whether it's a meme coin, whether it's like something completely different. Today, like the way that I look at it, I'm like, yeah, it's just a meme coin. Like fundamentally, it's not different than anything that's going to launch on Bonk or Pump.Fun. Like you can slap like a different name or like different tokenomics on it, but the way that people look at it is the same right now. But I understand when people like want to get hyper bullish on like the SocialFi concept and content coins, because like if it did become what they had set out for it to become, that's like billions and billions of dollars of opportunity. So like you could make an argument, I think, that there's like asymmetric upside here if you want to bet on Zora, just because like content is everywhere. If content coins take off for whatever reason, that's just one of the biggest opportunities crypto's ever seen. Do I think it's going to take off? No. But if someone has a better argument, I'm open to listening.
Yeah, we've tried this so many times. Like, you know, I mean, I totally agree with you. Like, I view them as, I mean, like a post as a coin, like a fungible token. I mean, like that's a meme coin. So I personally like my content with non-fungible with a JPEG. So I think we should make NFTs great.
Going off that, I kind of wanted to touch on, I want to get to the state of stablecoins, but I think the NFTs were kind of back there for like a week or two ago. Was that just a blip? People were making some money on chain and wanted to go flex again. I mean, if you look at the 30-day, someone swept the floor of CryptoPunks. I think there was like someone bought the Robert Leshner's cowboy CryptoPunk for $5 million, added $10 million to its treasury, GameSquare, FaZe Bank's holding company. So over the last 30 days, CryptoPunks are up 111%, Pudgy Penguins 175, Little Pudgy's 146. Is this just a classic people want to go flex on chain, or is there something actually brewing in NFTs?
I mean, I think part of it is honestly just the adoption of crypto in general is going up. So like if you look at, like CryptoPunks got swept, a ton of Pudgies got swept, every floor went up. But like so did Gen Art, like Chromie Squigglies went up, like Ringers went up, like a ton of these like non-flex on Twitter kind of NFTs. And I think like not a popular opinion, but I mean, I think digital art in the form of NFTs is kind of inevitable. And I think when we see more adoption into fungible tokens, more interest from the outside, like, I mean, these people could be long-term buyers and just be like, hey, I'm starting to see more adoption. Like I'm going to hold this for X amount of years. And it's going to be like a, artifact, like a digital artifact, 5-10 years from now.
I think that's definitely part of it. Like, I'm sure there's lots of people who last cycle lost all their bags, made some money just now, and they're like, you know what, I'm going to go back and buy that NFT that I always wanted. Like, I don't know, if I had caught Zora with leverage in size from the bottom to the top, I might have a CryptoPunk right now. But then I also think a pretty large part of it is NFTs are always seen as the last thing to move. Like you make your money on your major move, you make your money, you rotate into alts and memes, and then people just always have rotated into NFTs. So we probably just saw a bit of the tail end of like a mini move, I'd say.
I think it might just be people looking for leverage on ETH too, right? Like ETH going a little crazy, having to run up, and like I think sentiment having bottomed. People just look at the floor price of Azuki or Doodles or like the Penguins. Like it seems like a great way to get leverage, right?
Yeah, there's also different, I don't know, NFTs, they have that exclusivity factor, which I think gives it some level of value over the fungible tokens. And having that like, I own this and no one else, I think that's, kind of a continuation of the ideas already talked about, but like I'm going to sell, my liquid for something that's tangible to some extent and that I can show off, and it's more decorative in a certain way. So I don't know. I think it's just basic psychology of like, what do I do with my excess profit?
Something that I thought was interesting too during this little run was that Pengu, the token, was pumping like crazy, and also the Pudgy Penguins floor price was going up, which just makes me think that these two things can coexist without necessarily being dilutive. I mean, that was my take a while ago. I wrote a piece on NFTs, and I mean, I viewed it as two completely separate buyer bases. Obviously, Pengu did pretty horribly, so I was like, all right, maybe I'm wrong about this, right? But I think it actually bodes pretty well for like NFT projects, like good ones, right? Like blue chips that have launched a token that you are going to see different buyers, right? Like the person who's buying $200 in Pengu is not the same person that's buying a pudgy penguin, or even the person who's buying a little pudgy. So yeah, I don't know. I think that's the first time that we've really seen that on this run.
Some of the moves have been, I mean, the Pengu move in particular was, some of these things are seemingly left for dead and then come back in a like vengeful fashion, which always surprises me. I'm like, how do you go down 80 to 90% and then 10x? It's just like, it still blows my mind sometimes. Also with Pengu and some of the like NFT coins, or just in general, like part of me wants to think that someone is front running some catalyst that I don't know about. Like, you know, some of the larger cap alts like front running their treasury company announcements, but I don't know. I'm not saying that for Pengu, but I am suspicious of like where these moves come from. It's like 10x out of nowhere.
Yeah.
Like what?
Yeah, like I think that's like definitely one side of the spectrum, is that like there's information that literally no one has and they haven't even hinted at it yet. But then like a little bit pulled back from that is that like they have been hinting at a lot of stuff, and probably the people who were paying attention to what was really going on were accumulating during that period, started going up, announcements started coming out, it gets really reflexive and it just goes higher.
Yeah, I want to no easy segue, but like kind of the complete opposite of the trenches is stablecoins. Andrew, you co-authored and wrote a huge 128-page report on the state of stablecoins. We also launched our stablecoin API. Quick shill there. It covers 25 stablecoins, core on-chain metrics, network level breakdowns. But the report was the most in-depth report I've ever seen. So kudos to you for writing that with the help of Jake and Corbin, also on our team. And so you guys covered everything from centralized players, payments, and then all the way to on-chain money market funds and really stablecoins at the frontier. And so we can go wherever you want, but like, what was your favorite part of the covering? What did you think? What did you take away? And like, what are we seeing? And like, are we going to see more people kind of move to that frontier of things? Or are we really going to see more of like Walmart coin, Amazon coin first before some of these on-chain Athena and FX and some of these really on the frontier, as you guys titled the section?
Yeah, for that report, I covered more of the centralized efforts and like some of the TradFi companies that are kind of getting into the game. Probably the most interesting part is how many legitimate like payment companies are kind of integrating stables on the back end. I talked with Arnold Lee of Sphere Labs, which is one of these cross-border payment companies that basically allow you to transfer local fiat. They swap into a stable coin, and then on the receiver end, you receive the local currency. And there's all sorts of like difficult like boots on the ground work that need to be done in like establishing a network of partner banks so that you're kind of able to do that. And you need to have like connections to the real-time payment networks in those countries, and they're all separate and they all like operate in different infrastructure. So there's a lot of like work being done on kind of melding these two rails, and it's exciting that there's a lot of legitimate companies now that are integrating it behind the scenes. And I think longer term, we had some good coverage about just dollar access and financial inclusion and how difficult it is in some of these countries to just like have basic payment services or financial services, whether that's banking access, ATM access. They don't have really, you know, in some of these emerging markets, they might have a mobile operators or mobile phone, like I wouldn't call it like a Venmo equivalent, but they've like in countries that have very limited banking access, they've made do with these like patchwork solutions that use your phones as bank accounts. And then you can use like retail outlets to access dollars and like withdraw local fiat as well. So obviously for like there's an entire cohort of emerging economies that don't have either of those things. But if you have a mobile phone and you have a private wallet or you have a Binance account or some centralized exchange where you can send tethered, mostly on Tron, obviously that's like an order of magnitude improvement in the financial services that you can access. And so that was like a big part of our report. And I think it's exciting that more people are figuring out the use cases now and like actually getting a bit excited about it as like a legitimate use case, as opposed to just, you know, margin collateral on these centralized exchanges to trade perps.
Scott Bessent says we're going to have 3.7 trillion in stablecoins in 5 years. What are your thoughts on that opinion?
Yeah, the Treasury was is probably the most bullish on it. I think they see it as a lever they can pull to bid up short-term treasuries and help finance the deficits. Bessent has indicated as such many times over the past like few months. So there's been some arguments about whether stablecoins on net like actually increase like net treasury demand from like I'm seeing more and more macro commentators kind of post about stables, and I'm not always sure like who to believe, because there's some TradFi folks that are now kind of looking into this stuff, and there are pieces of their analysis that I think they're missing. But I think this will be like a recurring narrative either way, because the Treasury Secretary has talked about it so much, and they are looking to like shift their bond issuance more towards shorter term debt, and kind of makes it easier for them to finance longer term. So yeah, Treasury is very bullish on stablecoin market cap going up, and I think they're going to strategically use them over the next few years for sure.
Was there like outside of the main Tether USDC curve Athena, was there any protocol that like looked kind of interesting?
I liked 3Jane. I thought them integrating, like a big theme in the report was kind of this integration, whatever on-chain balances you have with actual spending in the real world. And like I haven't done in-depth research on them, but they kind of tap into real world credit scores so that you can take out USDC loans. This like melding of like, oh, like you can get private information through like ZK proofs that allows you to tap into some liquidity on chain. And then like you can just use those balances to do whatever you want. Like that's cool. These other ones, there's a lot more stablecoin linked credit cards. I covered like one from Hyperbeat, and they partner with a company called Rain that issues Visa cards and basically lets you either borrow or directly spend stablecoin balances on Hyperliquid, which also cool. I think that's going to be like a recurring theme going forward. Just actually being able to use your on-chain balances and kind of totally work around traditional off-ramping processes. So.
Yeah, but it also seems like we're seeing an integration of a lot of the technologies that we've been talking about with stablecoins. So like you mentioned 3Jane, I think they're using zk-TLS, which we've covered in the past to do the verification on off-chain mediums of like what your credit score is. And yeah, I think from my impression from the report is that a lot of crypto is going to come together with stablecoins. There's going to be integration of DeFi. It's going to be integration of ZK proofs. I think we could even see some, attention-based elements come in for creator stablecoins and celebrity stablecoins. What I'm going to call hyper tokens, just mixing real-world assets with attention-based elements in order to the best compete in the marketplace of stablecoins. Not that I'll get into that. But yeah, like what are your thoughts on just broader crypto integrating with stablecoins and maybe really being the onboarding of everyone into the broader crypto ecosystem?
On the one hand, like it's cool how some of these protocols are melding a bunch of those technologies together. On the other hand, like I don't really say someone gets onboarded one way or another, they have like a stablecoin linked credit card, or for whatever reason, they get onto a centralized exchange because the stablecoin has like a decent yield, like better than their bank account. I don't necessarily see new cohorts like diving into DeFi stuff necessarily. Like, I think if you had the temperament or personality to explore, or like you were curious enough to explore these things, you probably would have by now. Not to say that there's not like new people being onboarded every day, but I am skeptical about stable coins being that like vehicle that on ramps more people to the more complex, perhaps DeFi stuff.
Well, it seems like it's more on the back end though. Like all this value is coming in. Like TradFi is forced to start using crypto, and like I mean I don't know if that directly leads to retail, but little by little, I think like all of crypto just starts being used on the back end, and then like one day like everyone's using crypto without even thinking about it. And also like I think we overrate how big retail is. Like most money is controlled by institutions, or like at least like available capital to invest and flow into the crypto ecosystem. Like it's going to come from institutions anyways.
Yeah, I agree with that. But on that point, it's like within DeFi, I think a lot of DeFi is kind of you're arbing some inefficiencies that exist in like the current market structure and you're taking advantage of some like subsidized yield from a protocol that's raised money. And so once you get to the scale of like institutional funds trying to allocate in various ways, like a lot of the yield that exists and is attractive to retail and like attractive to use because it's slightly higher risk but also higher yield, like a lot of that would dry up. Like for like if an institutional amount of money, like tens of billions, enters and wants to put on the sorry, totally blanking out, the Athena trade, like obviously like funding is going to get squashed at some point, like if you scale it up enough, and at that point it becomes unattractive. Like these arbs that exist that are very attractive for retail and like in just regular investors, but if we actually onboard really large funds, like some of these things kind of disappear altogether, I would say.
I think like quickly we're starting to run over time, but like on the idea of institutional adoption and stablecoins playing a role in that, and to Andrew's point about like 3chain and the offering of letting crypto people spend in the real world, I think the biggest overlap is just crypto's now big enough and has enough money as an industry where you can't not service us anymore. And so if token prices keep going up, the pot of money that TradFi wants to access and provide services to and make a little money there is going to continue to grow. And I don't think TradFi is coming with any capital to deploy into what we're using. I think they're going to see a huge pot of capital sitting on the other side and going, how do we tap some of that? And like so far, the most successful things have, I think, played into that side of things. But yeah, just my 2 cents.
Totally agree with that. Like I think that's how we should generally be framing it, even though there will be some of that other flow where like, okay, yeah, there's some net new capital kind of experimenting or investing somewhere. But yeah, what you said about not like they can't afford to not service this new cohort, because like percentage of kind of younger investors that have some crypto exposure, it's like super high now. Like it's very normalized. And even the most like stringent or staunch non-believers like Jamie Dimon, they've caved. Like JP Morgan's gonna probably at some point accept Bitcoin as collateral down the line. Like if other banks do it, maybe they don't issue ETFs themselves, but like they're going to get into the asset management business. Like they want the banks are getting into, like cities looking at getting into digital asset custody. Like these are all, if this continues to exist and continue to grow, these are revenue lines for these companies. And it's like, if you don't want to service these people, well, like your competitor is going to make a bunch of money doing it. So
agreed. Yeah, we also saw the PNC Bank announcement where they're allowing their customers to like instantly deposit into Coinbase, which is exciting. And yeah, agreed with what you're saying. As we wrap up, we're going to merge DePIN Corner with what we're doing on chain. So Dylan, what's going over on DePIN? What are you doing on chain, and what are you seeing?
Thanks, Matt. What I'm looking at DePIN Corner this week is the Dawn Blackbox. So for those of you who don't know, Dawn is this fixed wireless DePIN. We don't need to get into the details. And that hasn't even been launched. But what they did launch was the black box. What is a black box? It's a box. It's black. It says Dawn. And inside, there are GPUs. There's capacity for file storage, for bandwidth, for anything you can think of in the digital realm that requires resources. And what they've done is, so far, they've partnered with 9 DePINs, where using this box, you can basically mine all those DePINs, the resources you can contribute. GPU compute, you can contribute bandwidth, you can contribute internet to people nearby. I think it also acts as a router for Dawn or a modem or whatever. I actually forgot what they called it, but basically the device that's receiving internet from the Dawn's fixed wireless system. So you're getting tokens from 9+ DePINs that I think are going to be optimized for earnings, plus connection to Dawn. And it's a pretty, innovative, cutting edge concept in DePIN where this is a box that's working for you. You buy it, you set it, and you make money. I think a lot of people are starting to wonder, like, AI's taking a lot of jobs. Like, my labor might have very limited value. Like, what am I going to do? How am I going to earn my living, so to speak? Maybe it's government UBI. Maybe it's owning 300 Dawn black boxes and other DePIN devices. But I think this is a really cool concept. I'm hoping to do a little more research on what the potential earnings are and all the specifics. So stay tuned for that. But I think, that'll be the main topic and the only topic of today's DePIN Corner.
Did you pre-order one?
My lips are sealed. but it's looking very, very nice.
I love this, man. This is like the full DePIN vision, like the vertically integrated DePIN. You're just harnessing energy, pure raw compute going into different DePINs. Very bullish on this.
So you pre-ordered.
My lips are sealed.
Yeah, I saw someone saying they're powering their black box with their solar energy from Glow. Everything's coming
Yeah,
together. That's pretty awesome.
Too.
So just like efficiency, you know what I mean? Energy efficiency throughout every vertical.
Yeah, and it's crazy how many verticals it touches on. Like you can connect it to Helium, you can connect it to various GPU providers, like I think Inference. You can connect it to Pipe and Blockcast, which are CDN. So like even competitors to each other, you can connect to. It goes across 4 or 5 different verticals. I think, yeah, this is. I don't think we've seen anything like this.
Yeah, very big for the defense space. Chris, what are we doing on chain?
So for me, the past couple of weeks, I haven't been super active taking actions on chain, but I've been looking into a ton of on-chain data. I have a report on Kaido coming out soon. It's the impact of post-TGE projects. So when they do a Kaido campaign, what actually gets affected? We're looking at mindshare numbers, we're looking at social numbers, we're looking at fundamentals, we're looking at price movement. And then we're looking at the ROI of these companies and seeing, is this actually a worthwhile investment for them to make? So I've been up to my head in data. This should be coming out probably by the time this is posted, though. So by next week, I'll be doing a lot more fun interactive stuff.
Any sneak peek? What's the TLDR so far? Is it worth it?
It depends on what you're trying to accomplish. I mean, it absolutely boosts mindshare, 100%. Social metrics are pretty tightly correlated with it. So people are, projects that are doing this are actually getting a lot of account level mindshare going to them too. So their own posts are being amplified. How much of that is bots versus not bots, we're not sure. But when you get down to fundamentals and price, it really doesn't move the needle. And mindshare is expensive. It's very expensive in the ROI breakdown.
That makes sense. Kenji, what are we doing on chain?
Same old, same old. Let's see. Playing around on Hyperliquid, always addicted to perps. Been looking more at CeFi, DeFi integrations. So with like Robinhood Chain, Coinbase launching perps. I think the market or CT has like this narrative that CeFi is coming, but if you actually look, it's just American CeFi is coming. Like Asia CeFi has been here the entire time. So thinking about how those integrations can look. One of the interesting ones is Coinbase has one with Morpho, which lets you borrow Bitcoin or borrow USDC directly against Bitcoin through the Coinbase app, but all the lending actually happens on the Morpho backend. And you actually, if you go and try to do that in your app, it's so clean, it's so easy, it looks so good, and it's been pretty successful for Morpho. So I think that's one where that makes a lot of sense, and it seems like it's working. We'll see about the other products that are going to get launched, like the perps products. You kind of just have to try to beat Hyperliquid. I don't know if anyone's going to be able to do that, but yeah, mostly taking advantage of the risk on appetite and doing a little research.
Yeah, I saw a metric where they compared the volume or the actual amount of open interest to volume on Coinbase perps, and it was a lot lower than most of the other platforms. So that's something we can dig into maybe next time. But Sam, what are we doing on chain?
Same as Kinchi. I'm just playing around on Hyperliquid for the most part. I think, like what I was saying earlier, looks interesting with the on-chain stable play. I think it's pretty good risk reward. I'm definitely interested in any upcoming Plasma, XPL, perps pre-launch. I think if we learned one lesson from the most recent Pump pre-launch perps on Hyperliquid, it's that's real price discovery. So I will try and be in and out of that trade pretty quickly is the goal. But I think there's 7x oversubscribed. There was 373 million committed, 373 million US dollars committed to purchasing XPL. It'll be the fastest chain to reach $1 billion in stablecoin TVL in history, backed by Paolo. We talked about a Goldilocks situation for Zora. I think this could very well be something similar for XPL and Plasma. Launching at a 500 million FDV. I doubt that's what it'll actually launch at, but that's what it was. Yeah, that's the most recent raise. So I think it looks like it will have a pretty good launch. So I'm looking forward to it. And Shoku just tweeted asking if anybody could connect him to the Plasma team. So something's cooking in the background on Hyperliquid with Unit.
Always cooking over at Hyperliquid and Unit over there. But yeah, excited for that launch too. Andrew, what are we doing on chain?
Besides downloading Zora for the first time, I deposited a little. I like just try out every DeFi protocol on Hyperliquid in case one of them pulls a Jito and is like actually airdrops a lot. But yeah, this one called Liminal, they opened up their caps. They do automated funding rate arbitrage. They've been, since they raised their caps, they've been growing pretty fast. I think you get like a funding rate that's around like 15% APY right now. So not like nothing crazy. It's also limited to like any Hyperliquid core assets. Oh, sorry. Any assets that have a unit listing, because in order to do that ARB. So right now that's just like Hype, Sol, BTC, ETH, and I think they don't have Pump and Fartcoin included yet. So I imagine that would have been much higher yields if they did, but it's not currently available. But yeah, they've been growing pretty fast. I've just been trying to mess around with anything new on there. Hopefully pays off at some point.
Is there still not a great like centralized place to go and see all the protocols being built on the Hyper EVM, or is there some public dashboard, or how are you finding these tools? Is it just through Twitter, or how can our listeners go and find more ways to get involved with Hyper EVM?
Honestly, on the EVM front, I feel like that's probably the harder part to actually navigate outside of Twitter and just following. It's easy if you just like have a few .hls in your feed because they will blast you with every protocol, every new one that pops up. But outside of that, I actually feel like the dashboards are more tilted towards the comparisons with the sexes. So like I like the hypeflows.com one. That one's really slick. But for the EVM, probably just find one .hl and they'll tell you every protocol they deposited in.
There we go. There you have it. Yeah, I guess for me, currently losing money on Solana on a Hyperliquid during this call, which kind of sucks. Rotated all Zora profits into it. But other than that, excited to get my Seeker here in a week or so. August 4th, shipping is going to start. So excited to get some hardware in hand, test out the Helium mobile network for the first time as an actual user. That's pretty exciting. Maybe get my Solana Game Boy soon. So a lot of hardware for me in the future. But that's about it. Just messing with data, write reports on Solana and Helium. As always, this podcast is non-financial advice. Like and subscribe wherever you're at, download, and thank you for listening and sticking around, and looking forward to hearing Dylan's big manifesto here next episode on creator stablecoins. Everyone's going to be waiting for it. We're going to lead off the show with that next week. But thank you all, and we'll see you in a couple weeks.